Let's bring in former Dallas Fed President Richard Fisher. Richard, also Jeffrey's senior advisor and a CNBC contributor. And it's good to have you here, Richard.
Well, if Steve says something, it is true. I just want you to know that.
All right. Well, I guess we're done here. No, so
we are.
I do have I think it's really fascinating, this moment that we're in. A lot of assumptions have to kind of be pulled into service to figure out what the proper stance is. Now, part of what Chair Powell has been saying is that the committee does not believe that the cost of waiting and seeing is particularly high right now. Does that make sense to you?
I think it does from an economic and monetary standpoint. Obviously, the President of the United States is not happy with it. And so it creates a little anguish on that front. And frankly, it has no impact on monetary policy whatsoever. They'll do what they think is right. And right now, I just ask you to consider, as with all businesses in America, until we get clarity, we're getting a little bit more, but until we have clarity in terms of tariffs and other actions on the economy, the bill that's hopefully about to be passed, you can't make a decision. You can't input the variables needed to model out the economy, which the Fed needs to do. So just like other businesses, they're sort of stymied here. They'd like to get more clarity, better understanding. And in the meantime, they're pausing. And I can understand that. I would be advocating for it as well.
Yeah, I mean, and obviously the president just today has kind of reiterated his stance that that Chair Powell is too late in making the United States pay more in interest payments and all the rest of it. But it's interesting how it's all playing out, isn't it, though? One, we know that Powell's not going to be renominated, so he realizes he's got like 10, 11 months left in the job. Right. The Supreme Court has said he can't be fired. So what we have is what we have. And therefore, you would think, especially given the committee as it's leaning right now, that they will just kind of call it as they see it for the next couple of meetings. Meantime, who knows? Maybe the data start to converge around the Fed doing exactly what the president is hoping it does.
Well, again, they're data driven. And until they get a better feeling for what the data are likely to be like or where they're leading us, I doubt they're going to move. Now, I just like to remind people, and Steve knows this as well as I do, this is not the first president to take on the Federal Reserve. He does it in a different manner, rather obtuse, very publicly. Again, don't forget what LBJ did to Chairman Martin. Mm-hmm. And also, before that, or after that, rather, what Ronald Reagan tried to do to Paul Volcker. He tried to get him impeached. They didn't talk about it like this president does that openly. And I like to say Donald Trump's approach is actually milder than LBJ's was with Chairman Martin. He took him to his ranch. He beat him up physically, literally slammed him against the wall. Mm-hmm. The boys are dying in Vietnam. You're not going to accommodate us on monetary policy. Martin did. And he wrote in his memoirs, he went to his deathbed ashamed of himself. Jay Powell's not going to do that. No one on the committee wants to do that. So let's keep this in perspective here. This is not unusual. Mm-hmm. It's over the top, the way this president likes to do things. That's his mannerism. He gets things done that way. It's not going to affect monetary policy. And
what about looking into next year,
et cetera? No, that's
and in terms of who the replacement to Powell might be, right, and whether that would change the formula.
Well, I'm of the view that unless it is Scott Bessent, who's outstanding, and every time he speaks, he's getting better and better. He's in control of the Treasury. I'm glad he's there. And on CNBC on Friday, he said, we're in favor of a stronger dollar. That was a happy thing to hear because the president and vice president talk about a weaker dollar. Mm-hmm. But other than him, anybody else who might be named early, I like to say will have a stamp on their forehead that says Arthur Burns. Remember, what happened after Martin, Arthur Burns took over the Fed. He led to the greatest inflation because he accommodated two presidents and just gave in to them. So I think there's a real risk here. Anybody who is qualified here, Scott or anybody else, especially the others that don't have Bessent's credibility, if they're named early, they're going to be known as the new Arthur Burns. I don't think anybody who wants that job would want that nomenclature. And right, I don't think it'd be good for the markets either. So we have a lot of history here. I think people should be aware of it, and we'll just have to see what happens. But in the meantime, it's not going to impact monetary policy. Powell will conduct the committee, and the committee will go as they see is proper for the sake of the economy.